Cryptocurrency is both one of the most exciting and controversial topics in finance. If you've been following the crypto market in recent months, however, you'll notice that the gains investors made last year have largely dissipated by now. Many are calling the situation a crypto bear market and wonder when, if ever, they will be able to see their cryptocurrency assets begin increasing in value. So, are we in a crypto bear market? When will it end? And what should savvy investors do with their crypto portfolios? We talk about this and more on Crypto Skills. To begin answering these questions, we have to understand what we mean by a bear market in general. For securities, a bear market refers to a situation where prices fall 20% or more from recent values. Now, that's a solid enough definition for securities. Investors frequently reference metrics like 10-day moving averages to get a feel for how the market is doing. However, if we took this benchmark of a 20% drop as our definition of a crypto bear market, then we'd have to say that assets like Bitcoin go into a bear market every couple of weeks. Instead, it makes sense to compare shorter-term trends with longer-term trends when assessing crypto. When we compare the 20-week and 200-week moving averages, we see something interesting. Crypto's moving towards a death cross. The death cross refers to an occurrence where a faster moving average decreases beneath a slower moving average. Think of it like a Ferrari that was going at 100 miles an hour suddenly being overtaken by a Prius. That would be a sign that something was majorly wrong with the Ferrari. That's what the death cross means for security prices. With short-term prices falling beneath longer-term averages, this death cross indicates that the crypto market is in a bear market. This is not merely a short-term correction or fluke, but an actual downturn in the crypto market. But before you start thinking that the end is nigh, the death cross does not necessarily spell disaster for an asset. In fact, it could sometimes mean the opposite. Sometimes. Let's return to our car example. If your luxury sports car breaks down on the side of the road, you wouldn't just abandon it there and start walking everywhere, would you? Unless your car is literally on fire, you'd probably get it fixed before you threw it away. Likewise, the death cross shouldn't cause you to abandon all hope on an asset or security. It should instead serve as a call to attention. Sure, the death cross represents a fall in the price of an asset, but it's not the end of the line. While it is sometimes the case that a death cross lets you know that the recent price action has deteriorated, it is often the case that a death cross precedes a short-term increase in prices. One study found that during bull markets, death crosses signaled a short-term increase in prices, even outperforming stocks where short-term averages recently went above longer-term averages. This was especially true for information technology and energy securities following the post-2008 recovery period of steady, albeit sluggish, growth. In other words, a death cross isn't a death sentence. Under different macroeconomic conditions, it can even be a positive signal. But just like crypto investors shouldn't see the current downturn in crypto prices as the end of the world, it is worth noting that the death cross is usually a positive signal for securities. But cryptocurrencies like Bitcoin aren't securities, at least not in the traditional sense. So anyone who is too optimistic that the recent death cross in the crypto market will signal an imminent recovery would do well to consider other macroeconomic factors. First of all, while the death cross is not uncommon for other securities, this is the first time in the history of Bitcoin that its price went below the 200-week moving average. Ever. That signals the potential for the price to spiral further over the short to medium term. There's also broader macroeconomic factors to consider. Some analysts have noted that the crypto market is more closely related to the S&P 500 than it has been in the past. As the US officially went into a recession in 2022, and many anticipate a global recession to be around the corner, it is quite possible that crypto could continue on a downward spiral as the global economy teeters on the edge of recession. Another point to consider is that there are currently unique economic factors that could potentially impact crypto. Wholesale electricity prices are at record highs worldwide, given that cryptocurrency mining is a highly energy-intensive process. As energy prices continue to rise, cryptocurrency miners face steeper costs to mine the currency. In order to stay afloat, these huge crypto operations have to sell their tokens. This floods the market with a larger supply of coins. As the supply becomes greater, prices move downward. It could very well be the case that as global energy prices stay high, which is likely to continue to be the case as the situation in Ukraine chokes the world's natural gas supply chain, cryptocurrency miners will have to keep offloading coins to stay afloat. Although it is far from clear just how much this dynamic is contributing to the crypto bear market, we can continue to expect some downward pressure resulting from this as energy prices remain high. Although this might be mitigated somewhat as Ethereum and other crypto platforms switch to more energy-efficient algorithms, mitigating the disruptive effect of energy supply shocks. Additionally, as energy prices show signs of recovery, there's further room to think that Bitcoin and other cryptocurrency prices might begin to turn around somewhat. Adding to the case for cautious optimism is the fact that it's been 322 days since Bitcoin's most recent all-time high of $69,000. After Bitcoin's price spiraled from its prior 2017 all-time high, it spent 364 days in a bear market before beginning to rise. Assuming past trends hold, Bitcoin and other cryptocurrencies could start increasing in price soon. While this downturn is noticeably more severe than the one in 2017, the more severe decline could mean that the recovery is just as dramatic. Investors who buy crypto while prices are at these historic lows stand to see some monster gains when the market recovers, even if prices never hit previous all-time highs. And we're back to the question we started with. When will the crypto bear market end? The answer is that we can't know for sure. We understand from recent trends that the cryptocurrency market is facing a bear market. Compared to longer run trends, the short-term moving price average has plummeted. However, in the past, similar declines have preceded big recoveries. The current bear market has also lasted about as long as the last one. Whether the current crypto bear market ends around a similar time as the last one will depend on other factors, but crypto investors can remain optimistic, if cautious, about the future. What do you think about the current crypto bear market? Do you think crypto prices will recover anytime soon? Let me know in the comments, and be sure to subscribe for more crypto skills.